Right, we're live now, Councillor Hull.
Right, thank you, Guy. Welcome everybody then to the March meeting of the Audit and Governance Committee. I think we'll start with the apologies with Hannah's help, please.
Thank you, Chair. We haven't had any apologies this evening, and I'll take a quick roll call if that's okay.
Yes, thank you.
So starting with yourself, you're here. We've got Councillor Barrett.
Present.
Councillor Hanley.
Present.
Councillor Harbron. No. Councillor Liss.
Present.
Councillor Mercer.
Present.
Councillor Noland.
Hello.
Hi. Councillor Place.
Present.
Thank you. And Councillor Wheeler.
Here.
Yes,
And then we've got independent person Greg Robinson.
thank you.
Present.
Thank
Right.
you. And that's all, Chair.
Thank you. I'm just going to ask Richard if he would give us an update on the position with internal audit, just so we understand the sequence of the agenda this evening. Thank you, Richard.
Thank you, Chair. Yes, Alison Johnson, the internal audit manager, sends her apologies. She's been unwell for a few weeks, and the day or two before the report deadline for this committee, thought she'd be well enough to have submitted the reports the following week, but unfortunately that wasn't the case. So she is feeling better. I've spoken to her today, but she isn't able to attend the meeting tonight, and as I say, passes her apologies on for not being able to submit the two reports that were noted from internal audit on the agenda. I do have an update, Chair, which I've received today on the state of play in terms of this year's audit plan. So if members would like, I can run through that very quickly verbally when we get to that point on the agenda. But otherwise, the two reports will follow to a later committee, Chair. Thank you.
Yes, thank you, Rich. That's really helpful, and we'll hear a little more, as you say, under those agenda items. So, committee members, I'd like to propose that we accept the minutes of the meeting held on the 21st of December 2020. Is anybody happy to second that? Thank you, Councillor Hanley. Any comments on the minutes anybody wishes to make? Can we? Right. Just, I think, happy with this, a show of hands, everybody happy with that decision? I think that's carried then, thank you very much. Right, public participation. See anybody dialed in? Not aware of anything, Hannah, no, thank you. Declarations of interest, members? Nothing to report, correct? Thank you for that. Right, now this is something new as we move into item number 5, the review of the budget process. I'm just going to very briefly set the scene myself. This is a new item. In my own head, I'm thinking of it as part training, which we've talked about a little before, but largely a governance issue. Arising from discussions with the leadership team and the select committee chairman, it's been agreed that ourselves as the Audit and Governance Committee will undertake a scrutiny role in relation to budget planning, performance against that plan, and the resultant year-end final accounts. So Richard and team will take us through a summary of last year's budget for 2021, the year that will be ending at the end of March. Not to be confused with the budget setting presentation which we had a couple of months ago from Richard and his team on the 2021-22 budget, made to all members, now signed off by policy and full council, and obviously has gone out as part of the council tax information to residents. So we will look at the budget assumptions made in April 2020 The progress to date will be tracked through a presentation that Richard and his team will be giving us. We will then review as Audit in General again when we see the final accounts for 2021 that our external auditors, Mazars, will obviously present to us in due course. Hopefully, that is reasonably clear to everybody. But what's really important, as I say, this is part training, part governance, and therefore I want this session, as Richard and his team take us through the slides, to be very interactive. Let's really get the questions, the issues, make sure we understand this additional role we now have to not look at it from the point of view of policy, making decisions quite rightly, but we are just making sure we're wearing our governance hats, our scrutiny hats, to make sure we're able to track and that we have confidence then that what we've been seeing during the year is then as it gets reflected at the year end in the final accounts. Now, I think it's quite fortuitous in a way that we also have the report from Mazars this evening setting out the work that they will do on the final accounts between now and their completion. So in our own minds, I want us to try and kind of patch all this together and think about this new role that we have as a committee. Does anybody want to reflect on that? Welcome it if you did. Okay, are we going to just suck it and see then, first of all? Okay, no comments there? Right, Richard and presumably Hannah will help by setting up the presentation. Can I hand over to you and to James? Thank you.
Yep, thank you, Chair. I'll try to share my screen now, so hopefully that will work.
Yep.
Okay, so you can see the presentation. Right, so thank you. So, sorry, Chair.
It has gone a bit smaller. Has everybody else's gone a bit smaller? It's not full screen on mine.
Okay, just bear with me.
Not sure of anybody else. I can't see anybody else now. Thanks, Richard.
Okay. Okay, so the purpose of the presentation really is to accompany the report on the agenda. So it's a formal agenda item, but also to take the opportunity, as this is the first time that we've sort of taken a budget scrutiny item to the audit committee, just to do a bit of background presentation and hopefully to help the committee in that scrutiny role. So I'll start and talk about the medium-term financial plan and the budget process. Then James Horden will take you through some of the comparisons between what we set out when we took the budget through for approval and what the latest position is, and then I'll try to summarise at the end. Do feel free to ask questions as we're going through, and again at the end we'll have an opportunity to take further questions if there are any. Also, if you think of anything after the meeting, do feel free to drop myself or James a line, and we'll try to answer your question. So if we start at the beginning, as we often do with the medium-term financial plan, so we have a budget, an annual budget that we have to set by law every year. But beyond that, we have to develop a plan that looks over a longer horizon, so that we can take a more strategic view on some of the decisions that we take. So medium-term financial plan, there's different approaches, there can be different lengths, but generally you're talking about a 3 to 5 year financial plan. And that plan really sets aside assumptions around what we think our funding will be over that period. So by the funding, we mean the money that used to be supported more by government perhaps than it is now, but the funding that we're talking about is the retained business rates, council tax, and some of the grants that we get from government, the ones that don't go directly into services. So we make assessments about those. We make assessments about the levels of income that we might expect to generate and expenditure. And when we talk about expenditure, it's taking a view on inflation, the cost of the payroll and pay awards over the time. But like any forward-looking plan like that, all of those things that I've just talked about can vary and can move around, and the assumptions that we make, depending whether we've got a 3 or 4 year settlement from government, or depending on the state of public finances and lots of other things which I'll touch on. Really the certainty sort of diminishes the further we look into the future. So generally speaking, you'd like to think the next year and maybe the year after you could have some certainty about, but as we look further into the future, it's more difficult to say with certainty what some of the key elements of the medium-term financial plan will look like. So as I say, the key components of it, the key parts of it are: what funding do we think we'll get from tax and revenues? What do we think our costs will do and how will they behave? What income can we generate from services? What's the reserves position? So different to the ongoing budget position, reserves are cash that we've set aside for specific purposes and can only be used once, but we can generally use reserves as a tool to help us to balance the budget. So when we look at the medium-term financial plan, the difference between the funding that we get, the income that we receive in services, the cost of those services, and any savings that we make, the difference between that sum is the potential either budget gap, more likely, or sometimes a budget surplus. So that plan we bring to members annually for formal approval when we set the budget. But James and I are continually updating it and changing it as we get better information or we get indications that our assumptions need to change. So that's the medium-term financial plan. Are there any questions on that particular part of it? Okay, if there are, we can always come back to them. So that's the sort of medium to long term. Each year, though, we also follow a cycle where we start to build the budget up. And formally, there are a number of steps that we have to take, so that in October, the calculation of the tax base comes for formal approval. So that's where we have to set out what we estimate the number of properties, the levels of council tax collection might be, and we approve a formal council tax base. And it has to be done that way and taken for approval so that there's openness and scrutiny about the calculation, and so that the council can see that the assumptions we're making are realistic assumptions around that council tax base. It's never 100% right, because we have to calculate it in October for the forthcoming year, but it does have to be based on realistic assumptions. There's usually a debate each autumn around, or maybe not every year, depending on the length of the business rate pool, but we do have to consider and have had to consider whether we are in a retained business rate pool. So in the current financial year we are, with North and West Yorkshire and Leeds. For next financial year we're not, because the sort of dynamics around that had changed, and for lots of reasons we didn't think it would be in our interests to do that. So that's a consideration when we're setting the budget. There's the formal approval of the fees and charges that comes to policy committee November or December. So then that gets fed into the budget. And then around December time, there'll be the announcement from government of the provisional financial settlement to local governments. And that's where they set out what funding they provide to councils and what the provisional levels of those will be. And the narrative around that in recent years has tended to focus more on this notion of core spending power. So you've probably heard at the time, just before Christmas, core spending power for councils in England increased by 4.5% on average. But the notion of this core spending power isn't a 4.5% increase in funding that's coming from government. The majority of that 4.5% is government's assessment of councils putting council tax up by the maximum that they're allowed to. So it's, sort of misrepresents the position a little bit, because most of that increase is what's generated locally. So anyway, so we get that provisional settlement in December. It's unusual for the provisional settlement and the final settlement, which usually comes in January or February, to be substantially different. So we generally all will set our budgets based on the provisional with a proviso that it could change, but usually doesn't change significantly. We then bring the budget proposals and the level of council tax to to policy committee in January, and then for that to be ratified by council. Like I say, final settlement usually comes January or February, and by law, the council has to have set its level of council tax for the forthcoming year by around the 10th or the 11th of March, depends on the calendar for that year, but it has to be done by then. Any questions on that element? Okay. So some of the things we need to think about when we are planning the budget. So we look at the medium-term financial plan. That gives us a good indication of what the position should look like. If we're in a year or a period of a multi-year settlement, so a 3 or 4 year agreement on council funding from government, well, that tends to give you some certainty then around the levels of funding that you'll get for that period. For the current year that we're in, and for the budget that we've just set, we were sort of outside of that settlement period. So for the current financial year and for next financial year, we had to wait until the autumn to get sort of indications of what the forthcoming year was going to look like, and that's what we have to work through, really. So in the absence of a multi-year settlement that we can rely on, James and I have to work through a range of possibilities, and as we get through the autumn, we become more certain, really, around what the parameters of those things are. And like I say, by the time we get the provisional settlement, we're usually well informed as to what the main funding lines will look like. We also review the current year, so certainly in terms of how service cost pressures are behaving, whether there's any particular issues in any services that we need to address, and we have the income and savings plan, which is reported regularly as part of the quarterly budget reporting, so that we can take account on a permanent basis of any savings or ongoing savings that we've identified through the income and savings plan. We do a complete review of our cash balances and earmarked reserves, and if appropriate, we look to potentially use some of those differently. So when we're talking, and we'll talk a little bit more about reserves and balances a little later on, but if any of those sums need to be reviewed and could be used differently, we'll consider that as part of the budget setting exercise. When we look at what drives our costs, so we've talked about the funding part of the medium-term financial plan, but our costs, our biggest cost is pay and pay-related costs. So pay inflation, we need to make an assessment of that. We need to factor in the cost of pensions over the period, national insurance. We look at key inflation lines, so things around energy inflation, for example, and take a view on those. You know, we look at what's happening in year. We get a steer sometimes from suppliers as to what costs may look like in the forthcoming year. We look at the capital plan and whether the capital financing budget, so the revenue budget that we put aside, if we're funding projects through borrowing and for the cost of sort of servicing borrowing in the capital plan, that's reflected in the capital financing part of the revenue budget. So we need to be clear whether that's sufficient to support the capital program in the sort of medium term. And we look at the risks underpinning the process. And as part of the package that goes through for approval to committee, we try to quantify some of those risks. So if income levels drop by, you know, X%, if costs increase by this percentage, what would it mean financially? So that's all set out in the package that we bring forward. But there are also sort of wider risks around, you know, the sort of wider uncertainty, if you like, going forward. So we get to a point where we can present a balanced budget for the forthcoming year, but certainly the current financial climate is you know, shrouded with uncertainty really beyond that, and I'll come on to that shortly as to why. So back in January 2020, as part of setting the budget, we reported that our costs generally are growing faster than the funding or the income that we generate to pay for them. So if everything stayed flat, we'd start to increase a sort of deficit budget every year because costs are growing faster than income generally. We reported last year that the budget was very much a one-year budget, that all of the key funding streams, so retained business rates, new homes bonus, rural services delivery grant, and the sort of underpinning funding formula for local government finance were all up for review, and those reviews were expected to start to materialise through 2021-22 onwards. So it was very much a one-year position. If you recall, it was shortly after the 2019 general election, so there was no time really to make any big policy changes before councils had to set their budgets. We reported that we assumed that the shift between the balance of funding would continue to move from central funding to more local funding. So a bigger burden on on council tax and incentivising growth through new homes bonus and retained business rates. And as I say, the key funding sources that we rely on from government were all under review. So we said that in January 2020 and said exactly the same thing in January 2021 because of what's happened in the last 12 months. All of those reviews around council funding have all been deferred for a year. So it's very much sort of deja vu really. The one-year settlement we had last year, we're in exactly the same position for the forthcoming year. It's a one-year settlement. It's effectively the fifth or sixth year, is it now? Anyway, it's a continuation of the settlement from 2016-17. you know, in terms of what was agreed then. So, you know, it's another sort of one-off year, even though it isn't, because it's the second. But all of those risks and all of that uncertainty that we reported in January 2020 is effectively just shifted on for another year. So in January 2020, the medium-term financial plan looked like this. So if we look at the first column of figures, 2020-21, that was the position then. The next column along, 21-22, is the medium-term financial position as we saw it at the time, and then it rolls on for another year. And the actual plan has another couple of years, you know, in it as well, but just for the purposes of presenting this, so you can see it roll forward. So at the position, or sorry, at the point where we set the budget, so 2021, the net expenditure budget, 7,042,000. So that's the cost of all of the services that we provide. It's the cost of the capital financing, budgets, etc. And it takes account of all the income that's generated and all of the sales and the fees and all of those things that go toward the net service budget. If you took the income out of services, you know, just the gross cost of it all is probably just under double that figure. But when we take account of all of the income, the net expenditure budget is just over 7 million. And then as we work down the medium-term financial plan, the way we sort of fund that, the way we pay for it, is shown in the next few rows, and we use brackets to show these as effectively as sort of money coming in. So of that 7,042,564 was from New Homes Bonus. 326,000 was the Rural Services Delivery Grant and one or two other smaller grant streams. 1.7 million was the amount of retained business rates that the council that we anticipated that will generate in the year. 39,000 was adjustments on the collection fund that we'd already calculated at that point, and there was 385,000 of net sort of transfers from reserves to use to support the budget. All of those things taken off the 7 million would leave an amount before council tax of 4,008,000 to be generated, and that's the amount that was generated from a £5 increase on council tax. So at that point, when that budget's agreed, you get to the 7 million net expenditure budget. We know what the funding position is, and then you get to a figure that's the amount needed from council tax, which is the 4 million, and that balances the budget. So the same logic applies going forward. So just notable things there, really. Probably the biggest was around business rates dropping down in 21-22, which was just based on a sort of assessment of a smaller slice of retained rates, but without any details, difficult to quantify exactly. And then, you know, that creates a budget gap potentially in 21-22 of 576,000, which again, if nothing changed the year after, that would have increased to 912. But the reality would be, and was, because we set the budget a few weeks ago, we address that budget gap in 21-22, and then we start to look at the years after that. So if you recall, a few weeks ago, we've again set a budget that doesn't have a funding gap in it. But when we produced the medium-term financial plan just over a year ago, our assessment was that there would be. and that's what we start to work through during the year to sort of determine how confident are we about that figure and what proposals can we start to develop to deal with it. So just some sort of assessment of the assumptions and how they fared, and apologies for the colourful arrows and things, but I was just trying to sort of indicate what actually happened and whether that was a good or a bad thing. But so if we take our assessment of what we thought the cost of pay would increase by, so we thought that would be 3%. The pay award hadn't been agreed at the time. The actual pay award was less than that, 2.75%. So the sort of green arrow pointing down is that the actual was less than our assessment, but in terms of the budgetary position, it's a sort of positive impact. Pensions, contribution rates, I suppose we were reasonably sure that they would be as set out, and that's what turned out to be the case. So okay with that one. Inflation, on the whole, it's in line with our expectations. Some inflation lines are slightly more, but others are less. And so overall, because different levels of inflation are applied to different things, the impact of inflation on our budget in the current year is in line with what we thought at the time. And then we get to fee increases, and this is where it sort of went a bit wrong. So I said before, you know, we as an authority are and have been really successful in being able to generate a significant proportion of our net revenue budget from sales fees and charges. So we look at things like car parking, the leisure facility, trade waste, these sort of things, all of which were really affected by the response to COVID and the various restrictions and what have you. So in that sense, you know, the 60,000 additional fees that we thought we'd generate has sort of been, you know, sort of completely thrown out of the window. But as I'll come on to in a little while, you know, there has been compensation for that from government now. So the actual impact in year isn't quite as stark. If we look at savings, so at the time we set the budget, we had 68,000 of green savings, and the actual position now is better than that, so it's 176. And amber savings, at the time we had 188,000, and the figure now is 138. So we've got more savings overall, and a bigger proportion of green rather than amber. So I've indicated that as a sort of a better position with a green arrow pointing up. And the budget gap, so as I said, 21-22 is now balanced, but the red arrow indicates that the position going forward for the next couple of years, the budget gap is actually worse than it was when we looked at it last year, and that's really around the uncertainty underpinning things like new homes bonus and what the replacement will look like, uncertainty around rural services delivery grants, you know, which is nearly 300,000 for Craven, and what will replace that. So it's quite a stark jump really in the potential budget gap, but until we get some certainty around those key funding lines, we can't say precisely what the budget gap would be. And of course business rates, as well as the various reviews and resetting of values. You've got all the uncertainty around what's happened this year, the more general state of the retail trade, etc. So that's a really uncertain funding stream at the moment. And you know, hopefully as the next financial year progresses, whether it's in the spring or the autumn, you know, we need some clarity really about those funding sources going forward. But in terms of the budget setting, you know, on the whole, things have sort of remained in line with our expectations at the time, as reasonably as could be expected, I suppose, in the circumstances. So this year has been a really unusual year for everybody in every sense. But the things that you know, we could plan for generally have fallen in line how we imagine them to be. So that, you know, hopefully gives some confidence around the process. So are there any questions at that point? No? Okay. Well, I shall now just hand over to James Horden, who will take you through some of the comparisons between the budget that we set and the actuals in a little bit more detail. Thank you.
Thank you, Richard. Very helpful.
Thank you, Chair. So I'll just take you through briefly the next few slides, as Richard says, a bit more detail about the budget that we set, so February 20. It's looking, or how the forecast is looking the last time of reporting. So in the first column, you've got the budget that we actually set. So as Richard's already outlined, coming down to the 7.042 million of net cost of net expenditure for the council, and that's then compared to the current forecast outturn for the year of just over 8.2 million. So that's obviously a fairly significant variance, adverse variance of 1.176 million. And then so I'll move on to the next slide down. I'll give a bit more detail about what makes up that 1.176 on the next slides. Sorry, can we just go back a slide? Sorry. So as Richard's already said, the income or the funding streams below that, so government grants at 564, RSG of 326, the N&A allocations, collection funds. So there, obviously, as Richard's already set out in that first column, come down to the 4.4008 million of council tax requirements. The column, I said, to the right of that demonstrates what we think they're doing. So obviously the initial income streams, you know, they are on track. We are getting, or we have received, or will be receiving those. And the only thing that to draw attention to is sort of the last three lines within that table. As Richard suggested before, there is areas of support from central government. So 768,000 of unhypothecated grant that we can use to fund shortfalls in service costs, or where costs have been incurred because as a result of coronavirus measures and restrictions that we've had to put in place, we can use that funding to plug that gap. And then there's also been some support around the SFC, so there's for sales fees and charges compensation of so this line shows 270,000, which was the estimate for the second 4 months of the year. For the first 4 months of the year, we actually received and have apportioned £800,000 worth of income to services. This 270 has not yet been received from government, although I've made that claim for it, which is why it's not been apportioned to services just yet. And then the 450,000, myself and Richard have put an estimate in for likely support for next year's budget a little bit, but perhaps more a contingency for any collection fund shortfalls in the year, whether that's reduction in rates receivable or council tax as well. So that net position takes us to just over or just under 4.6 million funded from council tax. And obviously, if we know we can levy just over 4 million council tax, there is obviously a gap of 588,000. Next slide, please. So this slide is again just a bit more detail around the service-based costs. In the first and second columns, like the slide above, it was the budget that we set, and then the second column is the forecast as at Q3, what we think is going to happen by the end of the year. And the third column then shows the variance of the two. If there's any bracketed figures, they're actually positive variances, whereas the unbracketed figures are adverse variances. So just to highlight a few. The waste management line, I think it particularly shows, obviously it's a £29,000 adverse variance, so it's an increased cost. So that's made up of two things. We've incurred a lot more, or there's been a significant increase in COVID measures, COVID measure costs. So we've had to hire vehicles, employ few staff, just to ensure that we can maintain social distancing on round provision, things like that. But equally, there's been some loss of income for the trade waste. But again, a lot of that has been supported through the government's sales fees and charges scheme. Leisure, obviously, leisure services is another significant variance there, and I guess the main attributed to that is the lack of income, the lack of being able to open and generate the income that it should be doing. Again, there will be some compensation for the sales fees and charges in that. I think the one that stands out the other way really is bereavement services. I think, unfortunately, and however morbid it seems, I think bereavement services have a bumper year in terms of income and not increased costs significantly. So that's why it was showing a very improved position as compared to what we expected last year. So going through all the services, coming down to, I said, this time last year we expected about 6.6084 million of expenditure, and we think actually our expenditure offset by income, I should say, and then actually we think the position is going to be more like 7.332 million. And again, the majority of that is some increased costs, but losses of income in terms of ability to generate revenue from services. And the next slide on just continues on from that. So it brings forward the net cost of service balance and then compares sort of the corporate costs below that. So interest receivable, capital financing costs, both have actually, well, the interest has actually been more favourable than previously, and that's down to the grants that we've been receiving from central government, the quantities we've been receiving. We've been able to put out short term and generate a bit more interest than we previously thought we would be able to. And then the capital financing, due to other projects and factors, we've actually had to increase the capital financing requirements for the year, or ahead of next year at least. So that comes down to the net expenditure budget, and then so the funding streams as set out below. So grants and rates receivable of 2.6 million. Again, that's in line with what we expect, as was the collection fund deficit predictions this time last year. Again, just like the slides above, it just sets out here the central government support of 768,000. There's sales fees and charges compensation claimed to date, and again that estimation of contingency and collection fund charges of 450,000, which comes down to the net position of deficit for 588,000 for the year. I will say that doesn't include a sales fees and charges compensation claim for the last 4 months of the year, which we've yet to put together. And then the next slide, please. So this is just a summary of reserves and how they have moved within the year. So at the start of the year, we forecasted, we had 6.5 million pounds of earmarked reserves, just under £1 million of general fund balance. So we expected to use in the forecast actually net contribution to reserve of 28,000. In actual fact, if we look at the actual columns of opening and closing, we are actually having now a net draw on reserves of 486,000 in the year, but that's currently not as a consequence of COVID response measures. It's due to other projects that have been approved throughout the year, Engine Shed Lane development and other initiatives that have obviously been approved by a policy committee ahead of the end of the year. And then the last slide from me is just a bit of context really how it fits into the statement of accounts. So we'll report the final position for 2021 as part of the budget outturn report, and that will be consistent with the net cost of spend within the statement of accounts. I guess the difficulty we have is obviously the Q4 will compare a budget set to an outturn, whereas the statement of accounts just shows the outturn. There's no real comparison within the statement of accounts of the budget set. It's more of this is the outturn and how that impacts on the council's finances for the year. But what we can do in the narrative report, and what we do is we make reference to the budget set at the start of the year and give some context about how the council's performed against that budget. And that, as I said, that's done within the first section of the statement of accounts in the narrative report, not so much in the core statements and in the notes. So there is a sort of reconciliation process between the budget and the outturn that we present to members and the final position of the statement of accounts, which essentially is how things move through the movement in reserve statement of the accounts. So essentially what we take out the costs that can't be borne by council taxpayers. We add in other things that can be, which we don't report to members on a quarterly basis. And so there is a reconciliation done, as I say, through between the outturn position of the budget and the outturn position of the financial statements, and that's all done as part of sort of the working papers within the movement in reserve statement of the accounts.
James or Richard? Sorry, I can't work out how to put my hand up with the presentation going on. Can I just slightly slow it down a little bit, in the sense of going back to the summary comparison there, where you're talking about the forecast at the end of February, a month ago, or two into March now, you're predicting 588,000 overspend at that point, yeah. And then obviously the next part 1 and part 2, the next 2 slides, give us that granularity of which departments have been overperforming, underperforming, for the reasons obviously that we've understood. Is that the position, the end of February position of just under 600,000 there, is that likely to be the end of March figure?
No, Chair. In my view, the final position I would expect to be close to balanced or underspent, and that's because the position that's reported here, and as you know, as was in February, doesn't take account of compensation from government for the lost income for the period sort of January to the end of the year, and so because
it's a very crucial point, isn't it?
Yeah.
A big change then, in other words, between February and March. So the points that James was alluding to around final accounts being looked at by external audit are closed, obviously looked at, and we could be seeing quite a few movements. I'm just wondering, therefore, obviously, when we, perhaps myself can pick this up when they're talking to us in a minute, we need to have that transparency, if you like, of these changes from these figures we're looking at today, which is, as I've already said, partly training, but partly getting our heads around it all, to seeing what actually happens at the end. Presumably, as you've indicated, a great chunk will be government funding, we hope.
Yeah, I mean, the scheme has been agreed, so I don't think there's any debate about whether the compensation will be there or not. It's just that at the time of producing this, and probably the time where we make the claim. I mean, we're the mechanism to do that, and the sort of paperwork that we have to complete hasn't been issued even yet from government. But I suppose what we can do is, because the methodology will be the same as previous claims, we'll be able to estimate with, you know, a good level of certainty, I would say, what we'd expect that compensation for the latter part of the year to be. So it's an unusual position to be in. The things, I suppose, the parts of the budget that we're more in control of are behaving as we'd expect them to. And in a normal year, you know, we might see some movement at year end, you know, as estimates start to crystallize, and usually it tends to move to a slightly better position than a worse one, which is good, because it's sort of built on taking prudent estimates, and you know, you sort of only bank some of these things when they're certain. So if it does move at year end, thankfully it tends to move positively, but and it wouldn't be by much, certainly if you look back at the last you know, few years. But this year's a bit different, so that we would expect to see a reasonable movement, a positive movement, which I think will bring us back to at least a level position, but might actually be slightly underspent by the time we close the year off.
Right, thanks, Richard. I'm saying, sticking with your theme there, perhaps in summing it up, actually, James just put the slide up, but just really be clear about the flexibility around these reserves that James has just got there.
Yeah, I mean, just, I suppose it's the definition, isn't it? Just to be clear about, because they tend, balances, you know, they sort of tend to get bandied around, meaning one and the same thing. I mean, if we just focus on what we call sort of cash-backed reserves, so not looking at things that when we get to statement of accounts later in the year, there are reserves that we use to make accounting adjustments, but they don't have cash behind them. They're just sort of accounting adjustments in that sense. But here on earmarked reserves and general fund balances, this is cash that the council holds, and earmarked reserves are things that you know, the cash has been set aside for a specific earmarked purpose, or a risk, or a future commitment. You know, it tends to be one of those things. We've set a specific amount aside for a specific thing, and the latest sort of estimate of what the total of those is on the slide there is 6.2 million. Then we've got the council's general fund balances, or general fund balance, and that's 999,000, and that's been consistent at that level for the last few years. Prior to that, it was lower, and there were, you know, efforts made to bring that back up to a more sustainable, if you like, and a more a figure that gives the council more financial resilience, and that's where it is now. And that's, you know, cash that's set aside for unexpected or unplanned emergency events. So, you know, again, if we go back to the start of this financial year, things were very uncertain. All of the government support that's currently in place wasn't, you know, so looking at reserves and general fund balances was part of the strategy that, had we needed to, we might have had to draw on to bring us to a balanced position by the end of this year. But thankfully, as the year's gone on, things have stabilised and we're not having to do it. But from a scrutiny perspective, you know, if there was a significant unplanned use of the general fund balances, or even, you know, a significant unplanned withdrawal from reserves within the year, you know, so things that weren't included in the original budgets, you know, that would sort of, as a scrutiny audit committee, I would suggest draw your eye to that, because it's potentially an indicator of resilience starting to weaken. So it's that type of activity that, as a scrutiny function, the committee would need to understand.
Because at 5.8, we're just under 600,000. We talked about possible the end of February. You explained that hopefully it won't be that bad. That eats very quickly into our just under 1 million, if you like, general fund.
Yeah, if that was the final position, and like I said, I'm 99% sure it won't be, but without alternatives to sort of deal with it. So if we ended up in that position, then you potentially would be looking at drawing from reserves or the general fund balance to address it. But like I say, I'm not. I don't think we will be, because like I say, the latest position doesn't account for additional funding that's coming from government, and I think when that is taken account of, the position will be more positive than the latest February figures.
Can I? Thanks for all that. That's helpful.
Okay.
I just apologise for everybody else. I think I hit one of these Zoom snags, haven't we? In the sense that I can only see you and James and somebody's wall, and therefore I've got no impression of how everybody else. Whether you're all waving your hands madly, wanting to speak or not. Obviously, we're sitting in a room. This would be quite different.
Absolutely.
So presumably,
Chair, Councillor Liss has raised his hand.
Thank you. Do you want to come in?
Yeah, thanks very much, Chair.
Thank you, Carl.
Yeah, I know we're looking at the performance last year against budget and making various comments on that. But I was quite interested in one of the slides that you showed on the medium-term financial plan, the summary at Jan 2020. You show very definite, or what would appear to be very definite figures in reduction of new homes bonus. Is that based on fact? First of all, that's my first question. And my second question is, have we had any indication as to what the government's plans are to replace? Well, if obviously they won't replace it all,
Yeah.
but what sort of fund are they going to introduce to try and compensate for the fairly hefty, in fact, massively hefty reductions in new homes bonus? Yeah,
well, thanks, Councillor. Yeah, in answer to the first question, the reductions were based on the information from government about the ending of new homes bonus in its sort of current form, and the tapering off of previous sort of benefits. So that position was announced quite early, so it wasn't unexpected. What was unexpected in the sort of last budget that we set a few weeks ago was actually that there was a slight continuation, if you like, for another year of the new homes bonus in its current form. So we actually in the budget that we've just set for 21-22 took account of slightly more new homes bonus than we would have had the government's position stayed the same. The replacement is being consulted upon at the moment, so we don't know, I suppose, when the announcements will be about what the replacement looks like, and what drives the funding, and is it based on growth in a year, or is it going to be based on longer term averages, and who benefits most? Is it going to be upper or lower tier councils? All of those are questions in the consultation, but we can't sort of preempt what the outcome is. But there's some of the models that I've looked at do seem to suggest that there'll be a sort of different balance between how much of that funding comes to district councils. So that's one potential outcome. So we need to see how it looks. it's one, it's one funding stream in amongst sort of 3 or 4 that are all being reviewed at roughly the same time. So, it sort of really adds to the uncertainty. But from Craven's position with New Homes Bonus, unlike many other councils, and I, said this at other budget presentations, we don't use the New Homes Bonus as a sort of ingrained part of our revenue budget. So it's not sitting in the revenue budget meeting ongoing costs. We've used it to support the capital programme, to provide some revenue support, but on a one-off basis. But largely it's been there and continues to be there to support capital projects. So in that sense, the risk isn't as great if there's a reduction, but it is a risk in the fact that that's funding that's been used to support some quite significant capital projects in the past, which if it changes substantially and less comes to districts, then would have a significant impact in that sense. Okay, thank you, Chair.
Thank you. All right, Richard, are we, thank you, James. Shall we go back to Richard now to finalise?
Chair, Councillor Handley's got his Councillor Handley's got his hand up, and I'd like to make some comments about New Homes Bonus as well, but Councillor Handley's been waiting very patiently.
Yes, apologies, it's really difficult to.
I was just looking at the revenue budget 2021, latest forecast February 21 part 1. Yes, that's the figure. Some of the figures seem to be either £1,000 out, or and the total figure at the bottom doesn't seem to balance out between the two, between the set February 2020 and the forecast February 21 figure.
Okay.
If you see the first one, the licensing services, 31 in brackets.
Yeah.
Forecast 1,000. Difference variable, and there's a few like that. There's about 5 or 6 different ones. And the bottom figure at 1249, I get to 1248. And no, it's minimal, but.
No, thanks, Councillor. No, it's that annoying thing around rounding of figures. So the figures that go into this were, bigger, sort of the full figures to the penny, if you like, and then they've been rounded up. But you're right, as you work it through, the rounding doesn't always follow on.
Yeah.
So, but that's all it is, and that's why it's one out at the bottom as well. So it'll be a few £100 either way. That's affected the sort of the rounding in it, but we just thought it was easier to present it like that rather than have the full sort of numbers on the screen. But that's all it is, Councillor. It's just the way the roundings.
You may want to put a little note on the bottom so that people can be aware of it.
Yeah. Okay. Thank you.
Chair. Just a couple of comments, Chair, if you don't mind.
Yes.
Just to give a recent history, because New Homes Bonus was actually taken from the Revenue Support Grant. So it was originally money that came to local authorities that was dramatically reduced and then given in the terms of New Homes Bonus to authorities. And it was related to actually building houses and to a direct reward, as the government saw it, for local authorities building housing. But it was the Revenue Support Grant, not new funding, not anything else. It was originally local government's money, which was taken away from us and given us back, not in as great a quantum as it is now. I think the other issue is that the government are desperate to find new money because they realise there is a social care issue. So that's why they're looking now at New Homes Bonus to see if more of that could be given to counties in our case. Or indeed, should the amount of New Homes Bonus distributed should be lower as well by actually hiring the factor that's built into it. So you've got to build above a certain number before you qualify for any. So I think Richard and James have been absolutely right in looking at this and saying yeah, it's going to, one way or another, it's not going to exist, or it'll exist in a very much smaller format, as the government have indicated. But it is only going in one direction, sadly. But as Richard has also pointed out, we haven't built our budget on this foundation, fortunately. A lot of authorities have, and they do face a potential cliff edge, which I'll be really interested to see how that is dealt with when the new homes bonus consultation is then put into law by the government and the changes that are made. So I hope you don't mind that, Chair, but
No,
it's
that's
pertinent.
Yeah, thank you, Paul. That's good. Right. So moving on then towards the conclusion of our analysis here. Rich, back with you.
Yeah, thank you, Chair. Just briefly then. So
Thank you, James.
Summarising, what I'd say is our core assumptions have proved reasonably accurate, reasonably sound in a normal year. So the things that we could predict, I think the assumptions have been okay. Hopefully that gives some, confidence around the process itself, because that's where, as a council, we need to be satisfied that the process we have for doing these things is robust and reliable. The levels of reserves being used as part of the budget support are within sort of normal parameters, so nothing alarming there, in terms of a big drop in earmarked reserves or balances. Impact of COVID has been significant across those items, but the ship's been steadied as we've had confirmation around various grants and relief from government throughout the year. Just the wider sort of governance and scrutiny positions. So you'll know that we report in detail to policy committee every quarter. At CLT, we sort of review the budget position every month as well. Variances at a service level or within those funding assumptions that we've talked about would be subject to challenge and do get challenged when we bring the reports through to policy. But again, there would be nothing to stop this committee looking at some of that in more detail as well. If there is significant unplanned use of reserves, then you perhaps should start to think about that and whether that's something the audit committee would need again to take a more detailed view on. And particularly for this committee, there's that link back to how the budget for the year finds its way into the statement of accounts, and the best place to find that is in the sort of start in the narrative section, the narrative report of the statement of accounts. But also the annual governance statement does that, which is part of the statement of accounts, in your view, sort of reflect the sort of perception of what's happened when we've reported the budget. And it wouldn't be a bad thing to have this as a sort of an ongoing, whether it be annual or more frequent sort of look at how we are going about the budget process and the continual development of the medium-term financial plan. So that's the end of the presentation, Chair. I know we've had questions, but if there are any further, quite happy to take them. Thank you.
Right, thank you, Richard and James. Right, it's good to be reunited with everybody again. Have you found that useful? Any other comments or questions that anybody would like to ask? Yes, Greg.
Oh, just a quick question, couple of quick questions. This is probably a bit detailed, but in the reserve adjustment on slide 16, I think it said the change in reserves was 486,000, but in the actual slides it said it was 385. So there's a slight difference, and I don't know whether that's relevant or not, but I just thought from a sort of scrutiny point of view, bear in mind that that's what you're asking us to do, then I thought I'd just point that one out. But I thought the presentation was very, very clear. And I suppose my other point, which I've been worried about before, is the use of reserves, which you've explained in the context of tonight, which is really helpful. But going forward, there always seems to be a growing gap between the running cost of the or the net running costs of the council services against the future income projections. And I think that's something that the council needs to be aware of and concerned about, because ultimately the reserves is a finite amount of support available to the council, and obviously there's a point beyond which you can't really rely on that either. So I think it's just a case of pointing that out, and I suppose from the audit committee's point of view, just to try and keep an eye on that sort of medium-term financial plan and that drift between the running costs, because some of the running costs or the net running cost differences are quite large percentage shifts. But I guess there's all sorts of reasons behind that, which you'll go into. But I think that was a point really. If there could be some reference back to the committee over time, over the medium-term financial plan, to just to give reassurance really, because you can't face a future with a growing reserve requirement without having a contingency plan for that.
Yeah, I think that's a really key point. Thank you, Greg. Richard, do you want to respond to that?
Yeah, I mean, just on that point, we have used reserves as a to underwrite, I suppose, savings or other proposals around balancing the budget in case those proposals didn't materialize. But what we don't do is, when we have the budget gap that we talked about, we don't sort of just plug that with reserve cash and not do anything about it. It is prudent to use cash reserves to sort of buy you some time to set your budget, but we shouldn't, because Greg's quite right, set the budget and not have a plan to deal with that shortfall in the sort of medium term. So whilst the 2020-21 budget was a good example, we'd identified savings, and some of you might recall when we set the budget, we said, well, until we've confirmed those savings, if they don't work out, we'd underwrite them from reserves from the new homes bonus. But as it turned out, we didn't have to do that.
But just sticking with Greg's point, if I may, I'm just wondering, I'm loath to create more work, but would it be useful eventually to have an understanding of the risk, if you like, of if we had to use that cash? Where would we start? So the one that's always quoted, obviously, is new bin lorries. What would be the impact on the different services if we had to transfer cash elsewhere? Would we have a pecking order? Do we have a pecking order, as it were?
Well, I mean, something like that. You see, we plan to replace those capital assets over time, so that for that very reason, really, so that we don't have the expense of having to, buy and fund, a bin lorry in 1 year. But there would be other options around that sort of thing anyway, that we might borrow and spread the cost over the life of the asset. That would be a prudent thing to do. I think that probably the best example of that sort of scenario really would be earlier this year when it was quite unclear, with all of our major income streams reduced or closed off for a period and not really clear when they'd open up again. There was no government support confirmed at the time, or I think we'd had 23,000, which was a drop in the ocean really. So around this time last year, or maybe a little bit later, sort of April time, I was having to look at the council's financial positions. Well, actually, if this carries on for the remainder of the year, and I think my figure to start with was a potential hole in the finances of about £4 million in the year, how would we go about sort of dealing with it? Thankfully, that wasn't the case, but it was a case of looking at the reserves. Are there any potentially that we could look to reallocate and live with the risk? How much balance could we actually use without having no financial resilience at all? So it's that sort of thing really. If it was an item of expenditure, you'd assume it's a capital expenditure, and you'd look to maybe fund that differently. But it, beyond this year, it would be very unusual to have a huge revenue deficit occur just out of the blue, but it actually could have done earlier this financial year, if you know what I mean.
Okay, great. Right. So generally, just all members here then, have you found that the presentation has been useful, I think? Can you see that emerging role for ourselves to stand back a bit from the work of policy, obviously, clearly, but just to have that view in our mind, particularly when our key report that we received then is the work of our external auditors. And I think we should have the confidence now, when we see those figures coming through, and there'll be other opportunities, obviously we have other meetings coming along, to just make sure it's all ended up as was expected. And we know the reasons why should that not appear. So generally speaking, yes, Greg again.
I just wanted to say, I thought your point about contingency was a really good one. And I think that as you go forward, I think you should be saying to Richard and Paul, in a situation where we face a major deficit, what levers can we pull? Because you need to sort of identify what levers you can pull, even if you're not going to pull them, just to give you confidence that you've got an organisation that has a financial pressure, so that the £4 million wouldn't be plugged by reserves, because you just don't have that level of reserves. That's my understanding from the presentation, at least. So it's a case of saying, so what would we do? What decisions could we defer? What spending decisions could we spread to protect the organisation? You can't do it in a meeting like this. You've got to ask the team to think about what options you could have. So you could say, going forward in the medium-term financial plan, we've got these financial risks, and this is how we might be able to address those financial risks by deferring decisions, or by making other decisions around cash flow, really. So I think it's I mean, I have to do this sometimes myself. It's a difficult exercise to do, but it's something that it's useful to sort of scenario plan. And I think from a governance point of view, it shows that the committee's doing its job of saying, yes, we recognise there could be a financial risk, but we also are starting to develop how we would mitigate those risks in a worst case scenario, or in a range of scenarios. And so it just starts that debate, really. So I just thought I'd just say that as well.
That's really helpful. Thanks, Greg. Any other comments? And before we move on to agenda item 6, which in a way we're neatly segueing into, we're going to be hearing about the work that external audit will be continued to do all through the year, but obviously starts to pick up now. And have others found it helpful? Very difficult, isn't it, when we're more than arm's length? Okay, content that we thank Richard and James for the presentation, and obviously we will be seeing this in a slightly different guise as we move through the next of our meetings. On that basis, everybody content we move on to agenda item 6? Yeah, so can I then welcome colleagues from Mazars? Let me just look into my oh, there we are. Mark, hello. And your colleague Keith is with you.
Thank you, Chair. We will take the report as read, but given that it is one of our main communications for the year, we would, if we can, Chair, like just to skip through the report, highlighting the key elements for your attention before we invite questions.
Yeah, I think that would be really helpful, particularly where you've got your diagram for the year and the tasks that you undertake quarter of the year.
Yeah,
that'd be very helpful.
Yeah, having said that, I will let Keith probably take you through the key point. But by way of introduction, this is our audit strategy memorandum. It sets out our responsibilities as your external auditors in auditing the financial statements, and also informing a view on your arrangements for securing value for money in your use of resources. It describes our audit approach, and as you've referenced there, Chair, the audit timeline. It also highlights our proposed testing strategy to address the audit risks that we've identified, both in relation to the financial statements and also our value for money work. Keith will say a little bit more about that timeline and also the audit risks in just a moment. The key sections that I'd like to highlight really quickly, if I can, Chair, before handing over to Keith, are section 6, which is page 44 of your pack.
Yep.
In that section, we highlight the planned fees for the audit. We highlight there that there are additional fees associated with the extra work that we are now required by our regulators to undertake on the valuation of property, plant and equipment, and also defined benefit pension schemes. There are also additional fees associated with changes in auditing and accounting standards for 2021, and likely increases in fees associated with a new code of audit practice and a new value for money approach for 2021. And I'll say a little bit more about that new code and that new value for money approach in just a moment. But just to assure the committee, in recognition of the upward pressure on those audit fees, the government has recently announced an additional £15 million being made available to the sector to help local councils meet those increased costs. In section 7, that's page 47 of your pack, I just wanted to confirm, as you would expect, the independence and objectivity of your local audit team. As I say, I'll now hand over to Keith for a little bit more detail before I say a little bit more about that new value for money approach, if I may, Chair. But for now, over to Keith.
That's helpful. Thank you, Mark. Yes, so Keith, the floor is yours then.
Mark. So as Mark's outlined and as the chair has already pointed out, the timeline for the audit is in section 3 of the report, which is our page 10, but is page 31 of the pack. And you'll see in there that we're already into the audit and working on the interim stage at the moment. And then we're proposing to work on the accounts between July and September, with an expected completion of the audit in November of this year. Moving on to section 4, as Mark said, there are a number of risks that we've identified through discussion with management and our early work, which are outlined there. The first 3 are management override of control, valuation of pension liability and valuation of property, which members may recall from last year. They're the same significant risks that we identified last time, and they're consistent to our work across local government bodies. So they're all fairly standard things that we identify on every audit that we undertake. We've also identified another significant risk that's specific to this year and relates to the COVID-19 funding that Richard mentioned in his presentation. And the reason we've identified that is because it is unusual. We're in strange circumstances this year, and we want to look at the accounting for that just to make sure it has been accounted for properly by the council. The final thing that I'd mention would be in section 8 relating to materiality. And the big change there is in relation to our performance materiality level, which we use as part of our sample selection. And we've increased that from 70% to 75% of the main materiality to recognise the improvement in the accounts last year compared to the year before. That's all I wanted to say, so I'll hand back to Mark to talk about.
Just before you do that, Keith, can I just suggest, in relation to materiality, if you could just colour that in a little bit for members of the committee in terms of the significance of these numbers.
Yeah, so we set an overall materiality, which is our kind of headline materiality for the whole audit, but then we set a slightly lower level than that, which is called performance materiality, which recognises the risk involved in the audit, and that Sampling can have errors in sampling can have a cumulative impact on the accounts that then needs to be reflected. So that level is used to determine the sample levels that we pick for income and expenditure. And then the final part of the materiality page is the triviality level. So anything above triviality, we're obliged to report to committee. Anything that's above performance materiality, we'd ask you to amend the accounts for, and anything in between, we'd ask members to take a view as to whether they want the accounts amending. I think is correct, isn't it, Mark?
Yeah. Okay. These quite significant numbers, aren't they, in the sense that, as you say, we're not working at that really detailed level necessarily. We recognise that comings and goings in the figures, but it's important to understand the level of materiality that we're looking at. Yeah.
Yeah, so just to add to that, Chair, I think that's a fair summary, but the committee will perhaps be reassured that we will test all items above performance materiality and also sample test income and expenditure below that level. And as Keith says, should we identify any errors or misstatements, we will report any or such misstatements above £16,500 to this committee in our year-end report.
Yeah. Well, thoroughly adjust the figures, so we'll get that record anyway, that table.
Absolutely.
Good. That's helpful, thank you. Sorry, right, so it's back. Thank you, Keith. So it's back with you, Mark, then, I think.
Yeah, I'm happy to pause there, Chair, and take any questions on the audit strategy memorandum. Equally happy to skip into the changes to the new code of audit practice and our value for money approach.
Well, are there any immediate questions on what you've heard so far then, members? Carry on then, Mark.
Okay, yeah, I'll carry on. Yeah, so
thank you.
in section 5 of our audit strategy memorandum, which is pages 40 to 41 of your pack, we do highlight that there is a new code of audit practice for this year, 2021. We also highlight that the main changes relate to our value for money work. As you can see there on pages 40 to 41, that provides you with a bit of an insight into those key changes. But I did, if I may, Chair, want to just spend a couple of moments bringing those key bits out and to your attention. So under the new code of audit practice, we will no longer report in the form of a binary value for money conclusion, as I say, on your value for money arrangements, i.e. there will no longer be a qualified or an unqualified value for money conclusion. The key output from our work now will be an annual narrative commentary on your arrangements to secure value for money. That new narrative commentary will be quite detailed in nature and will cover all of your arrangements under the 3 specified reporting criteria of financial sustainability, governance, and improving economy efficiency and effectiveness. Page 41 of your pack provides further details of those reporting criteria and also the underlying sub-criteria. Development and agreement of that value for money commentary is likely to require more input from both management and also us as your auditors. We have already asked management for self-assessments against each of those specified reporting criteria, and it's fair to say that the resulting value for money commentary is sure to require more discussion with the council before we issue it publicly through our new style auditors annual report. That new style auditors annual report will replace our annual audit letter, and we will report it to this committee alongside our report on your financial statements. A further change to bring to your attention is that where our work identifies significant weaknesses in arrangements, we are now required to report those weaknesses along with the actions that you need to take to address those weaknesses as soon as we identify them, rather than waiting until we issue our year-end report, as has been the case in the past. There does seem to be an expectation that the new approach is likely to identify more significant weaknesses in arrangements and give rise to more value for money recommendations. That's across both the local government and NHS sectors. That's not to say that that'll be the case for Craven, or in fact, if I'm really honest, in the first year of this new approach, given the rather unusual times in which we're currently all operating. We do expect the new code to result in additional work for us, an additional auditor time, and therefore it is likely that it will give rise to additional audit fee, as I've already mentioned. Having said that, I think it's right and proper that we see through this first year to have a better gauge as to what additional work has been involved and what additional fee therefore is appropriate. Committee will be reassured to know that we will continue to liaise with management on this front and also continue to report back to this committee on those additional fees. So I'll stop there, Chair, and happy to take any questions either on the audit strategy memorandum or that new value for money approach.
Anybody wish to? Yes, Greg. Thank you. Move to
Sorry, Chair. Yeah, I mean, I think it's a question and a comment, really. The comment is, I think I'm really pleased to see this change in VFM reporting, because I think I've raised it before that it seemed a bit of a strange piece before when we didn't actually talk about VFM properly, which was whether or not it was happening. So I think that's a real step forward. The question I've got is, will there be benchmarking as part of this process, or as part of assessing value for money by the council and then reviewed by the auditors?
Mark, are you able to?
I am indeed, yes. So really useful comments, Greg, and a little bit like you, I think we see it as a positive move in terms of the new approach. We will certainly, as part of the new approach and as part of the third of the reporting criteria, which is improving economy, efficiency and effectiveness, be looking at how the council uses performance information, uses benchmarking information to improve its economy, efficiency and effectiveness, and how it seeks to improve the services it delivers. So hopefully, Greg, you will see that as a useful addition. The only thing I would say is we are in year one of this approach, and I think we're probably all learning together. So I would very much hope that in 2 or 3 years' time, when we're not in the COVID world, this will be a really positive move. Ever so slightly nervous, if I'm honest, at this stage as to whether we'll see those big steps in the first year of this new approach. But fingers crossed, Greg.
I mean, just from your remarks there, it feels like then these changes were already in train and are not being affected or responding to COVID as such.
That's fair, Chair. Yes, it's fair to say that we have had some recent dialogue with the National Audit Office, who set this approach, as to whether in this strangest of strange years, whether it might need to be slightly refocused on the key priority of the moment, i.e. arrangements around dealing with COVID. I think the problem, Chair, is that we're now approaching the end of the financial year, and it feels a little bit late for that regulator, the National Audit Office, to be changing the goalposts. But as I said, just trying to manage your expectations there, that perhaps this year it won't be as comprehensive a commentary, won't be so driven by your local arrangements, but might have a view as to the environment in which the council is currently operating.
Great. All right. Thank you for that. Any other questions then to our colleagues from Mazars? So we'll obviously get updates from you as the wheel turns around. Any further comments, Richard, James? Comfortable? Yeah. Okay. Thanks again. Are you staying with us to the end? Right. I'm going to now move on, as Richard alluded to earlier on, in relation to internal audit work. Richard, I think you're able to, having spoken again to Alison, give us an update on agenda items 7 and 8.
Yeah, thank you, Chair. So again, just pass on apologies that the scheduled reports weren't submitted, but I did ask just for an update really on where we were with this year's plan. And it's actually quite a positive position, really. So it is a shame we weren't able to go through the detail, but we will share this with members formally. But just to give you an indication, within the audit plan for the current year, if you discount things like management time and what have you, we're sort of looking at about 14, I think, projects to complete. So 9 of those now have been either completed or draft reports issued. 4 are underway and in progress, and we've got 1 that which was, I think we had a bit of a discussion at a previous committee around when we drafted the plan initially for the current year. We'd included something around reviewing our climate emergency response and our plan, but I think as the years progressed, we've sort of agreed that that would be better looked at further into next financial year. So I suppose there's some mutual sort of consent, if you like, around that the timing of a review on that particular one would give better value, I think, if it was in next financial year. So in terms of progress, it is actually looking on track that other than that project, that the projects that we previously brought to the committee for completion in this financial year should be complete. I mean, the timing of some of the reports that aren't quite at draft stage yet will mean that those reports will be issued early on in the next financial year. But given where we were in terms of starting this plan with all of the work that the audit team did on the business grants in the first part of the year, particularly, that's quite good progress. But we'll report to you formally on that. But just thought I'd give an update to give some assurance that we're confident that this audit plan will be delivered in the current year.
Right, thank you for that, Richard. Any comments there? Does that cover both items 6 and 7? I think it does, Richard.
Yeah, I mean, on the setting of the next year's audit plan, I had been working with Alison on the potential range of projects that we would want to include, but obviously I've not been able to report that to you this evening, but we'll do as soon as possible. But I have had some 2 or 3 sessions, I think, with Alison to shape that plan for next year. So it has been developed, but obviously not reported tonight.
So, members, then, given what Richard's been able to update us with, that the 14 projects should conclude by the end of the cycle, and that we accept that probably the work on climate change, although we obviously as a council, we've had various presentations from various members, we accept that that will be deferred into the new financial year. Are people comfortable with that moving forward? Yep, I think that's a yes. Okay, right, you're silent, everybody. Right, all right, this will get them going then, Richard. Moving on to item number 9 then, contract exemptions that have been granted, or exemption that has been granted. Okay, Richard, is this for you to report on? So agenda item 9, members.
Yep. Thank you, Chair. I think these are fairly straightforward, really. The process is that when there's an exemption from the council's contract procedure rules requested, that we report that to the committee. I think in the cases reported, they are reasonably straightforward, and the rationale for seeking the exemption is justified. So there's a process to go through for each of these when an exemption is sought, and myself as Section 151 and Annette as monitoring officer are requested to
Yeah. So Annette, do you wish to comment on any of these? Obviously, you've tried to, you've really tried where you can to look at the governance of those changes and whether there was any alternative. So Annette, are you comfortable? Do you wish to say anything?
Yes, you're right, Chair, and I've nothing to add to the report. Thank you. We do look at them in some detail before we sign them off.
Yeah, okay. Right, so members, are you comfortable to accept the report at agenda item 9? Yeah, nods, yes, great. Right, I think then that concludes our work for this evening, unless there are any other items, not been notified of anything anybody wishes to raise at this stage. Can I thank everybody actually for, it's been quite a session, but I think it's certainly I believe it's starting to pull our work together, and I think it's been a good juxtaposition really of James and Richard's presentation alongside hearing Mazar's work to bring the year to a conclusion. So let's hope that will bear fruit as we go towards the end of the financial year and the closure of the final accounts. So date and time of the next meeting is on your papers there, Monday the 28th of June at 6:30, and presumably will continue to be a Zoom. Right, well, thank you all for your attendance, and we'll see you then, if not before. Okay, thank you.